All right, let's get into Tesla, my Tesla.
Growth rate is dipping, according to Cox Automotive. It says first quarter sales rose 2.6% year over year, but that was far below the 46% growth seen in 2023. My next guest sees a few themes at play here, including China, hybrids, pricing, in what he is calling an EV winter. Joining us now for more is Dan Levy, Senior Autos Analyst at Barclays. Dan, welcome. Good to have you with us. Is the EV market globally too beholden to government policy? In other words, subsidies on the one hand and penalties on the other for cars that don't live up to certain emissions or mileage standards?
Tyler, thank you so much for having me. Look, when we think about what's driving EV penetration, the analogy we've used is, carrots, sticks, and tambourines, right? How do you get a donkey to move? Carrots, sticks, and tambourines. How do you drive EV penetration? Carrots, sticks, and tambourines. The carrots and the sticks are government. And so for the foreseeable future, government is going to play a very critical role in driving that uptake. Certainly from the carrots, whatever incentive subsidies, but also from the regulations. And that's just not going away. Even if it's slowing or it gets pushed out, there is still a regulatory mandate in places like the US and Europe especially.
Do you expect that some of those regulatory mandates having to do with the kinds of cars new cars that can or will be sold in this country by 2035 will be changed? It's hard for me to believe that ultimately no internal combustion engine automobiles, new ones, will be sold in this country in 10 years.
The regulations are definitely fluid, right? We saw that already with EPA plans that were initially put out last year and already revised modestly lower earlier this year. We know that if in November Trump is elected, those regulations probably get softened as well. And certainly anything beyond 2030 is more aspirational more than anything else. So it's going to be fluid. There's a balance between pushing for decarbonization, but also recognizing where consumers are and where automakers are in this journey and the cost considerations for them.
I just want to talk for a moment, Dan, about Tesla losing share. You're seeing it in China, you're seeing it in Europe. You're even seeing it in the U.S. Where does that leave the stock?
Yeah.
Tesla losing share.
Year-to-date 2024 EV penetration on a global basis, 19%. So they're basing off of 1 quarter? Because we haven't even been through, I don't even think the numbers are out for the second quarter yet.
In China, you're seeing it in Europe.
In terms of
you're even
total
seeing it
for
in
everybody.
the U.S. Where does that leave the stock?
Yeah, the fundamentals for Tesla are in a tricky position right now, and we generally expect negative revisions.
They can't be out. We're still in June. They can't be out yet. So that's just
part of that is the volume outlook has certainly come down. We're at flat volume this year, and even that, some people would say is going to be tough to achieve. And next year, it's modest volume growth. I think part of the challenge here is that they are relying very heavily on Model 3 and Y. And as good product as they are, there is a model concentration challenge.
Right.
The U.S., it's natural that they're going to see some share erosion, just given how strong a share position they're at, roughly half the market. That's just a function of lack of competition. But Europe and especially China are very competitive. So they'll remain a leader on the EV front, but the competition is tougher and they have a bit of a model concentration challenge.
Model concentration, I just don't agree with any of this, just to be quite frank. I think Tesla's doing just fine with the 3 and the Y out there in the marketplace. And I think they'll continue to, right? Cybertruck obviously ramping volume next year. I think it's going to be massive for this company. A lot bigger than a lot of folks anticipate. Let's get into this one. Ron Barron on supporting Elon Musk pay package.
On Musk and Tesla, the markets and much more. We want to welcome billionaire investor Ron.
Well, there's no doubt China is a whole different ballgame. China's market's ridiculously competitive. They've got a lot of really good vehicles at really attractive pricing in China that you just don't really see in Europe, and you certainly don't see in the United States overall.
All right, now, Barron Capital, the chairman and CEO there. And Ron, it's always great to see you. Thank you for coming in today.
Judy said don't use the word billionaire.
You didn't. You didn't. Unfortunately, we did, because we have to call it like it is.
All right, multi-billionaire. Fine.
Yeah, okay. There you go.
So before we talk about this, I just want to know, did you guys see over the weekend the article on the front page of the New York Times? Do you read the New York Times at all?
No.
Yes, I
No.
do.
So passing by a newsstand, you could have
Stick
seen
needles in my eyes.
You could have seen it. And basically it was talking about how Elon has brought the internet, broadband, satellite to the Amazon in Brazil. Brought the Amazon. People don't have clothes, and now they have the Amazon. Now they have the internet. Unbelievable what he's done. Unbelievable, changing the world.
Yeah, but have you heard the other part of that story yet? Oh, have you guys heard the other part of the story? So supposedly, obviously, I don't live in this remote Amazon tribe in Brazil, right? And it supposedly is 2,000 people in there, okay? And so he brought internet to these folks, okay? And supposedly, what I heard, word on the street, is now these individuals in this tribe are now addicted to the P word, and they're also addicted to social media. And supposedly, the older folks in the tribe say the younger folks are now getting extremely lazy, and they use some word about they're learning the white man's ways or something like that. And so, yeah, it was. I don't want to go into more detail than that, but it was very negative overall from what I heard. And so, internet, it has a lot of good things, but it could also bring some bad things along with it, like many other things in life. And so, yeah, that's a whole situation. If you want to look further into that whole thing, you can look further into it.
A big deal in Ukraine, too, on the war front. Hey, before we jump into what you think about Tesla and the pay package, whether you're going to vote in support of that, why don't we talk about how much you own? Because I was looking, and it looks like I've known you've been a very long time holder. Some of your funds own 2.7%, 3%, 2.8%.
And the funny thing is, like hearing that story, I couldn't disagree with it. They'd be addicted to the P word, and then also them, using social media and getting more divisive and getting lazier. I heard that, and I'm like, I could believe that. You know what I mean? Like I'm like, that probably sounds about right. Like they got internet, and then that happened to them. Like, that makes about sense.
And the Barron Partners Fund is almost 30% long position in Tesla. So you are a massive shareholder.
It's also $13 cost. So, so we've owned it since 2014, 2016. Between 2014, so I met him in 2010. Mm-hmm. 2014 and 16, it took me 4 years. He said, what took you so long? 2014 to 16, we invested $400 million, made about $5 billion at the peak. Now we made about $4 billion, sold about a quarter of our stock 3 years ago.
How much do you hold now, though, in total? How many shares?
I don't remember the number, but it's a big percentage of our assets. It's 7 or 8% of our assets in total.
So what do you think about this pay package? This is a pay package that shareholders approved once this Delaware judge has overturned it, and now it's going back to the shareholders again. How will you vote your shares?
We're voting for the package. But before I talk about that, there's 3 things I want to discuss with you today. Number 1 is contracts, of course. Then I want to talk about Elon's ecosystem, all the different things he's doing. And then Elon, I want to talk about that, what he's accomplished. So about the contract. So first of all, he was, when we started, these numbers are pretty cool. When we started, when I met him in 2010, they were doing 2,000 cars a year. And then in 2014, it was 31,000 cars. That's when we started buying. In 2016, 76,000 cars. And last year, 1.8 million. So significant growth. And he made promises, if he met these metrics of EBITDA, of revenues, of market cap, that he would get this extraordinary compensation. And the compensation, when he started, when the contract was signed, it was the company's market value was $53 billion. Mm-hmm. It got as high as $1 trillion. That's now $550 billion. I think in the next 10 years, we're probably going to make 4 or 5 times our money again in Tesla. So he's created tremendous wealth for people, and he was paid, if this contract is enforced, which I think it should be, he's paid $56 billion. So it's like winning the lottery, if you, and Joe was talking about before, you win the lottery, you don't tell someone, I'm sorry, you won so much money, you have to give it back.
I remember thinking at the time that the compensation deal was a crazy setup, but I also remember thinking at the time that I never thought he'd hit any of the metrics.
No one
He's
did.
hit every one of the metrics. So it's hard to imagine taking that back and clawing it back.
Exactly. And so that's exactly how we viewed it. I said, man, if he hits this is fantastic. We're going to do so well. And again, I mean, he should have another contract going from this point going forward, where it's incented the same way, I'm hoping.
See, this is a difference between people like myself or Ron Barron or just people that invested prior to 2020 in Tesla, right? We made so much money off this stock, and we okayed the pay package before. We were fine with that, right? And so to take it back down, we're like, why? But then you got the 2020 after crowd, right? Which those folks haven't made any money on Tesla. Those folks, if anything, they've probably lost money on Tesla, unless they happen to buy the great dip that was in the end of 2022 into the beginning of 2023. Almost everybody else has lost money on Tesla if you invested, post 2020, right? And so those folks are looking at it and they're like, why is Elon going to get this big pay package when I haven't even made any money on this stock, or I potentially lost money on this stock, right? And I understand their point of view. It makes sense. I get it. But I also understand, people like myself, Ron Barron, or others that invested before 2020, and we made so much money off the stock, and we're like, it was agreed upon before. Why shouldn't he get the deal, right?
So number one, the contract. So 73% in 2018, 73% of the investors approved it. All of the disinterested parties who are directors, they approved it. And the people he has who are directors, these are not, flakes. They are Larry Ellison, one of the wealthiest men in the world, Hiro Mizuno. He was the head of the Japanese, pension fund, the largest pension fund in the world, $1.5 trillion. Kathleen Thomas, Walgreens, Boots. So he had really, and of course, Robin Denholm, who came later. But they all approved this, and they all thought this was a fair, a fair agreement. So basically, number one, all the disinterested directors approved it. Number two, that's the will of the company. The will of the company and the will of the shareholders. So I think he should be, it's a legally binding contract. And then who sued? You had an individual who was a shareholder for hire with 9 shares, 9 shares, sued. And it took him 5 years to get the derivative suit certified, but class action wasn't, so he doesn't really represent all the shareholders. And the lawyer who represented them, when you talk about getting lucky, he has applied to the court for payment of $5.6 billion. $5.6 billion. And then he is asking for the payment to be made in shares of Tesla stock, which are depressed because of this lawsuit. It's crazy. And so I think that, it's really unfair the way they're addressing this. And I think that he earned it, and he deserves it, and he should be paid it.
You've said for a long time, when we've asked you what your biggest concern about Tesla would be, is the key man theory, that so much is riding on Elon Musk being there. If he's not there, you don't think the company is worth the same. So what do you think happens if this package is not approved? What will Elon do?
I can't see inside of his mind, but I know that he has created tremendous value for everyone. I know he has a big stake in Tesla. But when I started in business in 1970, one of the people who really helped me at the very beginning of my career was Jay Pritzker. He's Tom Pritzker's dad, and he's the founder of Hyatt. And we were talking about arrangements, and he said, Ron, if you need to have a contract, then you're doing business you're doing business with the wrong person. You can't rely on a contract to do business, and you have to. He's a handshake guy. So if I say I'm going to do something, I do something. We said, as Tesla as a company, Elon, if you perform, this is what you're going to get. How are you going to go back and renege on that, especially when all the directors and all the shareholders approve it? It's crazy.
100%, yeah, right on in regards to that. So, I don't really have any more to add in regards to that situation. I already kind of shared my opinion overall, okay? Hey, I want to thank you for watching this video here today on the Clips channel. I want to introduce you to 1000xstocks.com. This is the most valuable service you're going to find out there. If you're an investor in the market, this is a tool that's going to help you immensely get to the next level in the market. So when you're looking at 1000xstocks.com, you're able to understand all the different metrics laid out exactly how you need them as a long-term investor in the market. So let's say I wanted to look at a stock like Palantir. I can go ahead and type in Palantir right here, and it's going to say all Palantir's different metrics right here. Let's say I want to go ahead and look at a stock like Tesla. I can go ahead and type in Tesla right here, search, it's going to give me all Tesla's metrics right there. Let's say I want to look at a stock like PayPal. Go ahead, search it up, and then it's going to give me all PayPal's numbers laid out right there. Compare feature is one of the most valuable features of any service literally in the world. And the reason being is you're able to compare 3 different stocks all next to each other in a matter of seconds. It's absolutely, there's no service you're going to be able to find something like this. So let's say I wanted to find out, what do I think is a better buy? Do I think it's Meta? Do I think it's Google? Or do I think it's, let's say, a stock like Microsoft, for instance, right? So I can go ahead, type all those in there, and then hit compare, and boom, in a matter of, what was that, a second or two, it gave me all the metrics out. So now I can say, okay, Meta's forward P is trading at this, Google's forward P is trading at this, Microsoft's trading at this, and I can go ahead and understand this on a very high level. Additionally, we have earnings calls on here as well. So if I need to listen to any companies I own or am researching their conference calls, I can do it right here through the service. So let's say Tesla, if I want to pull up Tesla's latest conference call, boom, I can play it. I can adjust the speed as well. So if I want to listen to it at 2x speed, I can listen to it at 2x speed, 1.5x. I also have the transcripts of the conference calls as well right here. We're also working on a lot of different new features behind the scenes. So if you would like to apply for access of 1000xstocks.com, go to 1000xstocks.com and you'll be able to fill out an application and go from there. Market rally does not need rate cuts to continue upward momentum.
Morgan Asset Management Portfolio Manager Phil Camporelli. Do we?
Nope, this economy does not need a rate cut, Sarah. So in short, the Fed's dual mandate, as we know, full employment and price stability. We have a 4% unemployment rate for the last 2 years, and their goal for inflation is 2%, which they're probably not going to hit for a couple of years. Sarah, when you interviewed John Williams at the end of May, we would agree with his take. And at the end of the day, it's a cost-benefit analysis. Does the benefit of a quarter-point rate hike outweigh the cost of a potential reignition of inflation based on easier financial conditions? And right now, this economy does not need a rate cut. I do believe that you should keep these meetings live as we go through this rest of this year, but today we don't need a rate cut.
So then let's talk about the valuation for the market. Mm-hmm. If you don't think that rate cuts are needed, then we do need earnings growth, and we do need economic growth. So where are we right now relative to what the valuation at record highs is suggesting? Yeah, good question. So we get this all the time because it's kind of like sticker shock if you look at just where the market's trading in terms of an all-time high. But okay, we handicap the economy at about a 2% real GDP growth, inflation at 3%, Sarah. So that's a 5% nominal growth forecast. If you were to give me that, I'd be like, earnings are going to come through. And in the first quarter of this year, we kind of saw that. We got a little noise in April based on the rate movement, but the earnings story we think is alive and well. Payroll number today. Listen, good news is good news when it comes to the labor market. I think the wage story is something we have to keep an eye on. Wages ticked up to about 4.1. But Sarah, the long-term average on wages over the last 50 years is 3.9. So we're kind of right on top of that. And this thing peaked in wages at 7% back in March of 2022 when the Fed went on their move higher.
There was some discussion this week about tech having already gone through the pain of cutting back workforce, and that they're not set for any kind of margin compression in the meantime now. Do you think that's true? Can they continue to lead as a result? Yeah, we think that's true, Carl. So that goes in the column of what are the particular sectors that don't need a rate cut. So Sarah, you asked, does the economy need a rate cut? We don't think it does, but we believe that things like small cap may, or REITs, or traditional fixed income may need a rate cut. But Carl, to your question about tech, Apple did the largest buyback in the history of the universe, and they didn't need a rate cut, right? So the free cash flow story we think is really important, and we continue to lean into kind of
That's true, but I don't know if he really got the point the gentleman was trying to make there, Carl Quintanilla, right? Big tech. So they cut a lot of workforce. We know about that, right? A lot of job cuts went through in 2022 and 2023, and then a little bit at the beginning of this year as well, right? And so next time we have their businesses kind of go a little south like they did in 2022, they don't have as much to cut right now, and that's true. And so if these companies' businesses went south because the economy went south, it's not like they have a kind of get out of jail free card like they had before in terms of they were just overhired and it was easy for them to cut 10,000 employees here or 20,000. I think now it's going to be a lot more difficult if they were to do any cuts, right? And so I think that is a risk factor to assess out there. But the good news is many of these big techs are not trading at rich valuations. Look at Meta, look at Google, right? It's not like the valuations are crazy on those stocks. Look at a Google McDougal, look at Meta, 24 forward Ps. Those companies have very nice growth rates expected for those companies, right? And so to be trading, or these companies are trading, is not crazy at all, right? NVIDIA obviously looks a lot richer, but the growth rates are NVIDIA. They're self-explanatory, they're ridiculous, right? So, those are things to kind of factor in. Apple has been trading a little rich, right? Let's compare Apple here. So Apple trading about 28 forward P roughly. But they should get back to nice growth next year, and the reason being is they should be launching a big iPhone. When I say big iPhone, it's a bigger iPhone than they've ever had, and so I could see a nice cycle in iPhone next year, along with obviously services growth. They put up good numbers for services growth basically every year, and they'll continue to do that until the government gets involved, right? And so, looking at the valuations, can't say anything's really that crazy here. So. Yeah.
Growth story in the S&P. Do you have a percentage for Q2 earnings yet baked in? Yeah, not for earnings growth. Yeah, not quite yet. But over the full year, 10 to 11% earnings growth is what we're penciling in. But again, this all goes back to the fact that the U.S. consumer is looking really good right now, and they're paying 3.8% on their mortgage. That's the average effective mortgage rate. Carl, the average effective mortgage rate when the Fed had a zero interest rate policy was 4.3. So we're paying less in our mortgage rate today than when the Fed had a zero interest rate policy, and that also fuels the earnings story that we're talking about, despite the valuations that Sarah was talking about.
So if you're a buyer of stocks,
yes. Carl's like, pump it, baby. No. I don't know, man. I just feel like a lot of the under $100,000 in household income folks are not feeling that great still. And then I feel like it's a different story if you're talking about the top 10% of income earners, the top 10% of the wealthy, right? I think a lot of folks feel very good. Stocks are high. Real estate prices are still high, which is great if you own stocks and you own real estate. If you own other assets like Bitcoin, for instance, that price is extremely high, so that you feel great about that. You're getting great returns in treasuries. You're getting great returns in high yield savings accounts. You're getting 4 or 5%. So yeah, the top 10%. Yes, feeling great. Then you go like the next 20% of income earners, right? Probably okay. But then I think the bottom 70% is not as good of a story, right? And you can say the bottom 30 or 40% always feels bad, pretty much in any situation. But it's that other, let's call it the middle 40% that I think is the one that's kind of getting still hurt at this point in time because of inflation.
Again, you've got a tale of kind of two different markets with technology far outpacing everybody else. And a lot of these other stocks not doing too well. First of all, the Russell's down more sharply than the rest. And you have groups like Staples and Energy that have underperformed significantly. So where do you go?
Yeah, so there's a breadth story. First of all, you spoke about the non-U.S. opportunity before. We are diversifying our overweight to equity, Sarah. We're about 2/3 in the U.S. and 1/3 outside of the U.S. Developed markets, though. So we're not quite yet jumping into the emerging story. So there is a breadth story outside of the U.S. that we think you can take advantage of. And then the other piece within fixed income, we're trying to find equities that look fixed income that looks like equities. So that brings us back to the corporate bond story. They don't need a rate cut. Only 2% of the high yield index needs to come to issuance this year. Very, very low. So we are spreading that out. And the three-headed monster that people were so worried about, higher rates, higher inflation, and recession, those things seem to be moving lower. So we are sellers of macro volatility, I guess is what I would say. And if the market hates uncertainty, that's again fueling our overweight to risk assets.
Yeah, I disagree a little bit. I think the odds of recession, in my opinion, have gone up a little bit. In terms of higher rates, if you're talking about Fed funds rate, I think there's an extremely low probability the Fed would raise rates, right? So I'll take that off the table, really. In terms of lowering rates, I feel like if this next CPI comes in 3.1 or under, I think that would definitely move things up. I think if we come 3.2 or higher, I think that is still not a point in time where the Fed can really cut, and that still pushes things out to maybe the fall or the winter time in terms of when the first cut comes. So that's kind of my 2 cents in regards to all that. Okay, guys, appreciate you joining me as always. Hope you enjoyed today's video. 1000xstocks.com, that will be pinned comment down there if you're looking to apply to join us in 1000xstocks.com. Much love and have a great day.